Let's take it forward, the discussion with the markets, with a whole host of experts joining us on the show right now. We are being joined by Pashupati Advani. Other than that, Kunal Bothra as well as Sharan are also live with us in our studios. A very good afternoon, gentlemen, and thank you so much for your time. Mr. Advani, firstly, help us with your take on the markets, because of late, the index is not doing pretty much for itself, but there's a lot of sector churning at play. Help us understand how are you sensing the pulse of the market right now, and any sectors that look good to you?
So first of all, I guess we have to get woken up. So, let's wake up and look at the market, because it's really been, as you said, floating and almost listless. I think what's happened is there's some structural change in the market with a lot of the retail people have gone pretty much out of options, and that's cooled the volume down. Volumes have actually gone down quite significantly, which is in the long run not so great, but in the short run, at least retail doesn't lose money. But the reality is that people are going back to basics. So they're looking at, real manufacturing. They're looking at dividend yields again. So again, there's some, fancy towards PSUs. There's been a big run up in defense stocks, which I'm not so sure about, because they're all at huge multiples. But I think that, all in all, this market has always been stock specific. But the real challenge is that we've had a lot of IPOs this month and a lot of FPOs, and that's put a lot of paper into the market, some $7-8 billion, and that's much more than normal. And however much SIPs and all we'll have to buy, it's not catching up yet. So we'll have a bit of, digestion problem, eating up all these new papers.
Mr. Advani, appreciate that take. Good afternoon, this is Nehi also joining in the conversation. But Mr. Advani, when the market momentum is so dull, so lackluster, you still have a lot of positives going on for us. Like today's AMFI data looks good. You have macros that are holding up well. The high frequency data we are getting is not all that bad. And in fact, our earnings preview for the earnings season right around the corner is also not so tempered. Given all of these positive factors, the market is very lackluster. How does one maintain a portfolio? How does one maintain patience and momentum at given how lackluster the market is at the point?
So again, I think what people are doing is moving from one sector to the other and getting out of sectors that have been asleep. Like, for example, the FMCG sector has not done very much for the last year or so, but people are beginning to look at it. They're looking at stocks like HUL and all again, which were the bellwether of the markets. And they're saying that these stocks have hardly performed in the last 12 to 24 months. So let's look at them and see which of them we should buy. And, they're also looking at companies which are going to do well despite. So if you've got a big local market, you've got a big local moat, those are the companies that people are looking at, because they're going to have real results, not interest rate sensitive, low debt. These are all companies that people are wanting to get into, and I think that's what's happening. And it's a gradual shift. You can't do it like huge, but you're doing it slowly.
Point taken. That's the take on the markets and the sector rotation that is at play. But Kunal, help us with your take. Firstly, on the index front, quite a lackluster day for the markets right now. But where are we headed?
So yet another boring day for the index.
Kunal, are we headed anywhere? Should be the question. Are we moving at all?
Even if you're headed within a range, I think you're still headed somewhere.
Right.
But yeah, I think it's been a directional market so far in the last 2-3 weeks, and primarily because of the reasons. The markets are awaiting what could happen in terms of tariff, which sectors could get impacted. We are still, seeing that many of the global asset classes have gone into a range for themselves, whether it's crude, whether it's gold, silver, etc. So I think when you're looking at that kind of a setup globally, as well as in terms of the expected news flow or the event around, the markets are bound to go into a zone of consolidation. But I think I would still believe that with the kind of breakouts which you're seeing, the leadership over the last couple of days emerging from the banking index and few of the financials, there could be a sign that we may expect the markets to gradually head up higher. It's just that the expected news flows which are turning out, I think if they don't turn out to be on the negative side, then I believe that the markets have this capacity to try and just about consolidate and then move up higher.
Okay, so that's the take on where we can expect the market to go. But Sharan, what is your sense of the market right now? Because every time we try to cross that 25,500 mark, we're there for let's say 30 minutes or so, and then we slip back once again. That's what we've seen today too. When do we cross this 25,500 mark and stay there for good? Any visibility on that?
So when the tariff news comes, then we'll cross it up or down. But definitely the market is waiting for a big trigger. Nobody knows the date. Everyone is just guessing it'll come tomorrow, it'll come day after. Until it actually comes, I think we are towards a sideways to a downside consolidation. So you can see the market trading between 25,300 to 25,700, up and down depending on the days. But I think again, Bank Nifty is still doing better than Nifty. And you can expect some more days of sideways consolidation till we can get a little clarity on the tariff situation. So overly nothing to see, very boring day. Stocks are just moving around 1 or 2%, maybe not that also, under 1%. So very stock specific moves today in the market. So I expect this to continue for the next 2-3 days at least.
Okay, so that's the day coming in on the markets. Not much happening on the index front, but indeed a lot of stock specific action rather. And we'll talk all of that just after this quick break. Stay tuned for more. We'll be right back in a few bit.
Hi there, welcome back to Closing Trades. Now, Nectar Life Sciences is under pressure with the stock dwindling by 30% in the past two trading sessions itself. Now, why the slide in this stock? What is causing this pressure on the stock? Sharad is joining us with more details on this. Sharad.
Small cap company Nectar Life Sciences in focus. The stock is down 30% over the last two trading sessions, and the company has given an announcement of the sale of its API and formulation business to Ceph Life Sciences. Now, of course, the consideration is 1,270 odd crore rupees. Now, the expected completion is expected to happen before September 30th. But there are certain queries which have been raised by ET now, and there has been no response coming in from the mailed queries sent to them. Now, let's understand the mathematics first before delving into the questions. Now, the deal itself, the enterprise value is 1,270 crore rupees. On the other hand, the company itself in their outlook, they had given an FY26 EBITDA guidance of roughly 260 odd crore rupees. So keeping those multiples as per our calculations, the deal is coming at 5 times only of EV EBITDA. That seems very cheap, or at a distressed sale compared to the industry average of the deals which happened in the EBITDA multiple between 8 to 10 odd times, and these are the company's figures itself which they had projected. So there are certain questions we are asking the management, and we want that doubt to be cleared, and also we are requesting the regulatory agencies also to look into these questions. First one is why the deal has happened over such a low valuations. Is this a distressed sale? And if yes, where are the important details which should be there? Also, for FY26, the management has given their guidance. Have they changed those numbers for this deal? Also, the management, have they overlooked the interest of the minority shareholders as well? What are the cues for the minority shareholders from this space itself? Because the stock itself has been cracking for the last two trading sessions. And also, there isn't much more details coming on the deal itself, and mostly for the buyer itself. How did the bids come? How was the buyer selected? There's no details given of the buyer. They have just written that it's a non-promoter entity, which is a third party as well. Of course, the stock has been on a losing phase. 1 year itself, stock is down 47%. And the last two trading sessions, the stock is down more than 30%.
All right, thank you so much, Sharath, for getting us all those details. So indeed, a sharp fall coming in on Nectar Life Sciences, and thank you so much for actually explaining all of that to us. But Sharan, help us with a quick chart check on this counter as well, because it's already down 10%, but is it backed by good volumes as well? And how do you see the charts on stock on charts?
So on charts, the stock is very bad, Shristi. Again, a lower low, lower high pattern. And today, last 2 days volumes, I think one of the highest in the last 6 months at least, since October. So chart pattern is very bad. If someone has it, I would suggest a clear exit. Think about it if it crosses about 23 odd. But given the current volume selling, I would suggest a clear exit from the stock. There's nothing else to look in the stock also. Chart pattern is very bad.
So clear avoid coming in on Nectar Life Sciences. But Mr. Advani, coming to you, while we are talking about this end of the market, we have often seen that when the market is consolidating, it's usually the broader end of the market, the mid cap and the small cap names that are at least holding on to some amount of gains. Or when the market is gaining, it's actually these group of stocks that are leading from the front. Today, too, case in point, you have Nifty, mid cap, everything that's down, but Nifty small cap, that continues to shine today, up another 0.5%. Mr. Advani, how would you advise our viewers to position their portfolio in terms of a healthy mix between the Nifty and the broader end of the market?
So what actually is happening is that the SIPs are kind of doing it for us in the sense that people have allocations into mid cap and small cap, just having ticked those stocks when they bought them. And actually the buying in mid and small caps tends to be our retail and our mutual funds. So I think that that's what's driving the indices. But again, if the action shifts to the large index, then quietly the mid cap and small caps get hammered. And then today the large index is kind of asleep, so now the focus has come back to the small cap. So it's a cycle, but I think that it's very difficult to play this one and really make money and take money out of it.
All right, but other than that, taking a look at the markets, we are almost at the day's lowest point. It's more than 60 points of cut is what we are seeing on the Nifty 50, and a bit of a pressure actually is coming in from big boy Reliance, wherein actually some reports are also suggesting that Reliance Jio has actually delayed its India IPO plan, not planning for 2025 listing. That's the news flow as per agencies, but Kunal, just wanted to have a chart check on this one because it's a sharp fall. What we are seeing on Reliance, but what does it mean and what could it really mean for Nifty as well?
This could be more of a, I would say more of a derivatives induced correction, because the cash volumes, we were just discussing this offline, is not on the heavier side. So this could be more of speculative. And we've seen historically that whenever the stock goes into a speculative correction, the bottom tends to be formed very quickly. We just have to wait out for a point when the stock reverses and say retraces this 40 odd point correction intra-device. So I think even if it jumps up another 20 points on the upside, say comes closer to 1540 mark, I think that would be a good reversal point for Reliance Industries. So I think as a short-term trader, one should not be perturbed with this kind of a correction which has happened in the last, I think, half an hour or so.
Okay, so that's the take on Reliance. But Sharan, we have been talking about this stock. You have been bullish on the stock, and I'm talking about UltraTech Cement, because while we have been highlighting how muted the market has been, UltraTech Cement has been a stock that's very quietly inched up to a fresh all-time high. Give us a chart check on UltraTech, and any more legs to this rally are you spotting?
So definitely stay, like we have mentioned before also, I think it's almost at a new breakout level. If it trades above 12,575, I think it can take it to 12,800 to 13,000 levels. And not only UltraTech, the whole cement pack has seen some kind of accumulation in the last 2-3 weeks. So I'm more or less positive on the whole sector. You might see a total sector breakout in the coming week.
All right, so that's the day coming in on UltraTech Cement, an all-time high coming in for this particular stock, and even the cement pack is looking good as of now. But Mr. Advani, we will just kickstart the earnings season from tomorrow, and TCS will be the first one indeed. Any hopes that you have from the IT space, and with this whole chatter around that how AI can actually impact the overall sector, the jobs could be at risk as well. How do you see this impacting the Indian IT companies, and how well prepared can we be?
So the Indian IT companies have been trying to change their business model slightly and have kind of managed to do a little bit, but obviously not enough. Apart from the AI component, which is also very strong, we've also got the challenge of the immigration department in the US having slowed down a lot, and therefore the visas and the H-1Bs and the other things that our big IT companies use to get more business seems to be, obviously slowing down a lot. So I personally am not particularly enthralled about IT companies in general, because I think that the business model has to change a lot. And, unless you're going to get IT company workers to be the people who are going to test the holiday market, I think that it's going to be a little bit of time before IT companies are picking up. And the other challenge is IT is a big chunk of our index. So I think that that's going to be a sort of dampener and a hat on top of our index, stopping it from going up.
Okay, Mr. Advani, really appreciate that view and also appreciate you joining us on the show today. Thank you for taking the time out and speaking to us. On that note, we'll let you go.
Thank you.
Thanks so much. But Kunal, coming to you, give us a sense on where you are seeing any value, if at all, and where are you placing your closing trade for the day?
So that'll be Kotak Bank, and I think out of the very few private sector banking names, Kotak Bank is apparently one of the few ones which is actually seeing a mild bit of a follow-through up move. The stock after yesterday's gap up opening and then a close at 2200 plus levels, I think has sustained the close and the momentum which was seen yesterday, and that too on the back of some higher volume jump which was seen yesterday. So my sense is that over the next couple of days, you might probably expect a follow-through up move for Kotak Bank, so that looks attractive.